So what has changed? Where have we been going with in the last 2 years within the AEC space from your point of view and Brick and Mortar Ventures point of view?
Yeah, so I would say like the main thing that we've seen is I would say proliferation of technology startups that are getting founded outside of Silicon Valley.
So before today, we were moving to the US, but now we're moving to India.
Yes.
We decided.
Yeah.
I mean, so I was just in India last month to really experience this. So since we've brought on Audi, I've been wanting to go to India because I hadn't been in, a good number of years. And the excitement around tech and startups in Bangalore is pretty insane. Like,
Yeah.
and I was talking to other VCs there, and it really does feel like construction tech is where the US was like 6 years ago.
I've been dying to ask, since you mentioned India, were you taking tuk-tuks or Ola cab to the meetings or?
Oh yeah, I took a tuk-tuk. It was a lot of fun. And it's a lot faster.
Where is, I mean, obviously AI, but where is like sort of the trend going?
What's hot?
Yeah. I mean, there's definitely a lot of AI. I think like any and every company is either adding on some type of AI related thing or now pitching as an AI company. So I feel like now you almost have to like discredit AI in some sense. It's like everyone's talking about AI, right? Like the industry is talking about AI. Startups are talking about AI. I think for us and like what it's always been is like, what is the problem you're solving?
So how many deals have you guys done in the last, let's say, year and a half or 2 years or a year even? And how many decks do you go through each day, week, month, or whatever? On average.
Yeah. I don't know if there are averages. I think it does kind of like fluctuate, kind of depending on what time of year it is. And, frankly, whether or not, we're traveling or there's events going on. Because, when we're in person, we try to give as much time to in person. So we're obviously meeting with founders when we're at conferences in person, but actually don't have data.
Have you seen the quality of founder and founding team perhaps increase, Alice, since you're sort of day one on the job as a VC versus now?
For sure. I mean, and even going before I joined Brick and Mortar, if you look at some of the like, OG construction tech companies, I like calling them that.
I know who you mean. I call them the same.
Yeah. So a lot of the OGs, they had, a co-founding member that came from construction, right? Or the founder CEO came from the industry. And it was very much like, this problem exists and it sucks and no one's building tech for me, so I'm going to go build it, right? So that was probably like the first persona of founders that, we talked to, or well, Brick and Mortar, actually even pre-Brick and Mortar, Darren and then Curtis, back in, the early 2010s, right? Those were the types of founders. But now we're starting to see, repeat founders that, have done and sold a company and now looking for, the next big industry with a lot of problems to kind of come in and build technologies for.
Hey everyone, and welcome to the Bricks and Bytes podcast, where we dive into construction and AEC technology. Before we get started though, if you're a startup founder or operator responsible for innovation in your company, or you want a deeper, more insightful look into technology in AEC, you won't want to miss our newsletter. From deep dives into particular technologies such as AI, robotics, design, software, and so on. Hot takes from investors betting big in AEC technology and advice on building tech companies, including the stories and takeaways of the most successful AEC technology founders. Head over to www.bricks-bytes.com and sign up today to get this exclusive material straight to your inbox. And now for the episode.
This episode is brought to you by Build Vision, transforming construction supply chain by bringing contractors, manufacturers, and stakeholders onto a single software platform. Visit buildvision.io to find out more.
All right. Good morning, good afternoon, guys. So we just learned that Alice managed to cancel the tsunami that was about to hit San Francisco earlier this morning. Talking of wild weather, actually, I will never ever forget the first episode we recorded with you, Alice, because it was like 41 degrees or something in the UK. This was 2 and a bit years ago or something now. And I had to pillage someone's office because I don't have aircon at my house to record the episode. So yeah, welcome back. I'm glad it's a little bit cooler around here now.
Yeah, thanks for having me back. And it's been incredible to see, how many episodes have launched between the last time we spoke. So great.
Yeah, we've
Thank
done
you.
probably 200 between last time and now.
All right. Shall we? Okay, let's just say we're going to dive into a little bit about Formwork Labs and where you guys have been. Talk about some of your recent investments, and then we'll talk about sort of the macro view, perhaps geopolitically, and more about what's going on specifically within construction and do you use the term construction tech or AEC tech?
We say construction tech, even though technically we look at design, construction, operations, and maintenance. So we always have to explain it. But I would say the customers that the technologies we invest in serve are AC, but even plus because it's also the entire supply chain. And in some sense, from a market vertical perspective, we get into mining, civil infra, so gets into the federal side. But yeah, construction tech to be easy.
Okay. So let's kick this off. And so what has changed? Where have we been going in the last 2 years within the AEC space from your point of view and Brick and Mortar Ventures point of view?
Yeah, so I would say the main thing that we've seen is I would say proliferation of technology startups that are getting founded outside of Silicon Valley. And when you look back and kind of think about it, it makes a lot of sense, right? Construction is global, somewhat regionalized in the sense that, it's not one big construction company that does work all around the world. And just given, different drivers, how much does material cost, how much does labor cost, that drives how people look at and adopt technology and the types of technologies that they need. So over the last couple of years, we've seen, startups come out of Europe. So I think Europe has had a stronger kind of construction technology ecosystem from both the startups, founders, industry interests, as well as, venture capital perspective. The latest area that we're looking at is actually in India and APAC. So yeah, and it's interesting because if you look at how brick and mortar has grown over time, last year we brought on Guillaume, who's leading our efforts in EMEA. And then a couple months ago, we brought on Adi as a part-time venture partner looking after India and APAC. So, as we see a lot of these trends in both, our deal flow, as well as what we're hearing from the industry as a whole and kind of interest in different regions where construction spend is starting to grow. We're also making sure that we have team members that are there to kind of help build that construction tech ecosystem and to make sure that, we're learning about how construction is done in different parts of the world, and position ourselves to invest and be a part of that kind of growing construction tech community.
Very interesting. So you said something super interesting. I want to unpack it. You said that there's most of construction startup activities happening in Europe. Did I hear it well?
Yes.
Okay. Our experience is that maybe that's true, but they all go to the US because that's where the money is.
Yeah.
Yes and no. So I think it depends on the types of startups and what are you building. So definitely for anything related to climate sustainability, Europe is definitely a lot stronger from both a customer base as well as a funding perspective. I mean, frankly, with a lot of the regulations in the EU around, whether it's renovation work, increased insulation, a lot of that stuff, Europe is the market for that. But when it comes to, some of your typical maybe BIM VDC tools, project management, that type of stuff, things that are, I think, a little bit, less I guess, focus on regulation, obviously. Those are tools where, if you could sell to anywhere in the world, I think a lot of people look to the US market just given, and this is what we've learned is, scaling software technologies is a lot easier across the entire US than it is in Europe, especially given, different languages, even between, region to region in Europe, you have a slightly different supply chain. So what we've been learning is that, can't really treat Europe as Europe. There's different parts of Europe, and there may be different regions within Europe where, certain startups are going to be able to scale more easily. But yeah, the funding side and the startup side, I think most of the more like successful, bigger rounds and that type of stuff have been a bit more focused on the sustainability side of things. And then here in the US, we're kind of, waiting for what is to come when, the ROI calculations make sense and cost makes sense. Then, we're here to help those startups scale into the US. So yeah, I think from a numbers perspective, we've definitely seen more deal flow come out of Europe. But yeah, I could see, you mentioning like based in Europe, but maybe selling to the US. And we
Yes.
that, with, dev team in India, based in India, selling to the US, or, other parts of the world where a startup has more or less gained, quote unquote, like not maturity, but like, they've sold to the big contractors that they can. And then what's the next big market, right? But we do like to spend time talking to a lot of those startups on figuring out like, sometimes the US is not the best market to go after next.
Why not?
Hey listeners, I want to take a quick break to remind you about the Bricks and Bytes newsletter. If you're interested in learning about the technology shaping the future of construction, you won't want to miss the valuable insights we share each week. To get this exclusive content delivered straight to your inbox, head over to www.bricks-bytes.com and sign up today. Link is in the show notes. Back to the show.
Depends on what you're building. So one of our and this is probably one of my interesting insights. And actually, I think we talked about this last time. But the idea of the quantity surveyor, right? Like that does not exist here in the US. So if you're building a technology that is very, I guess, disciplined around cost, financials, budgeting, basically things around project controls, sometimes the US market is not best suited for that because your customer base or like your, the person that you're selling to on the construction side, there are no defined roles. So you're going to have a ton of trouble, trying to find the right project manager that is managing that particular scope within a construction site. Whereas, basically a lot of places outside of the US, you have, site planners, you have, owner side project management, you have CM, you have all these very defined roles that you can basically go after that persona and probably sell to them and go to market a lot faster than trying to sift through okay, there's 10 PMs on this construction site in the US. Like, what scope do each of them do? What is their actual job? It's just a lot more vague. So yeah, we kind of talk through all that and try to figure out, okay, how do you get to the customer as fast as possible, spending the less amount of cash and selling a product, where in the world, how may construction be structured so that it's easier or harder?
Okay.
Is it a good, I just wanted to touch upon people, because we've also been listening and reading about this idea of people building companies in places like Europe and then selling to the US. How is that perceived in the US? Are they a little bit like, you're not a US company, or we don't like the idea that you're based somewhere else, we want you to be in the similar geography, or are people quite open to it?
So there's a couple of different ways that you have to look at that. I mean, first and foremost, for venture capital, you have to be able to, return capital to your LPs. There's taxes involved, and I am in no way an expert in this. We have to pull in our lawyers and, tax folks. But from what I know, there are certain places around the world where it's easier, harder to get a deal done. I've heard that in Germany, it's a bit harder because you have to sign contracts in person. You have to have a lawyer. I don't know how much of this is
it's true.
We
Yeah, you have
haven't
to read the whole contract aloud before people sign it, something like
Like
that.
12 hours sitting sometimes.
Yeah.
Yeah. So there are just some VCs, and like the thing is, like, VCs are lazy, right? It's like, why would I spend an extra 12 hours to like do this investment in Germany when there's a similar startup doing this in Silicon Valley that I can just like, basically write a term sheet and get it done, right? So I think there's a little bit of like, how easy is it to get a deal done? There's some like tax implications. Here in the US, doing early stage investment is very very tax advantaged. There's a lot of mechanics to that, but like as you're thinking about, around the world, if a startup is founded in certain places where it's just a bit more challenging to do an investment, that's where some of the VCs will start complaining. But then there's like upsides to that too, right? So, we've seen some very successful companies basically build their product in a place where, there's really good development, lower cost of development of software, and the ability to sell that into the US market at a higher margin. So there's like, that type of arbitrage. And then, of course, you got to think about, where is that company incorporated? You do the math. Will the contractors pay for it? And chances are, if it's a, similar or better product and less expensive, that's pretty easy to do. But of course, you touched on are we comfortable that, they're not in the US kind of thing. I know there's definitely a playbook of, regardless of where your technology is getting built, if your salespeople, speak the same language, look similar, understand construction lingo, you could still sell the product. So I think there's a lot of different strategies there. And yeah, I think when VCs look at, investing in overseas overseas from the US companies, all of that kind of comes into consideration. We've done investments in Australia, North America, Europe, and looking to expand globally. I think for us, there's going to be regions where, it's like a buy that region for that region kind of play. And then there's obviously, buy that region for a different region kind of play.
So maybe let's explore this a little bit. So these partnerships and looking to expand globally, is it an idea that just came about, or that has been a plan? And regardless to the answer, why are you expanding?
Yeah, so we've always known that construction is global. Darren coming from Bechtel does work all around the world. Curtis was at Hewitt. Kosta, during his time at McKinsey, he worked with, Jacobs and some of these big owners with strategies on, expanding overseas or buying companies from overseas. So, in construction, we kind of already know it's really global. When I was with DPR, I helped set up our office in Singapore. So like, we've known that, construction can be global. It is global. And from our experience, we've also known that, construction can be slightly different depending on where you are in the world. I think some of our first investments have been in Australia, US, and Europe, just because the way that construction is done and structured and labor costs and all that tend to be fairly similar. And I shouldn't kind of bundle all of Europe together, but, parts of Europe where construction was a bit more mature in terms of, willingness to spend on technology. And then also, the startup ecosystem, VC ecosystem. So I would say those are probably the three things that we would look at for a region is, we can't be the only ones investing there, right? Because frankly, for venture capital, you need follow-on investment. They need to raise more rounds of funding. So you do have to wait for a little bit of a maturity on, the VC side of things. You need founders and entrepreneurs from that region. And then you also need, industry that is ready to adopt tech, right? Because otherwise it's like, you might go there, you may be the only ones, like maybe a bit too early for the market. So all of that kind of comes into play. And I would say really for Europe, we started seeing, more startups. We started seeing more, big construction companies interested in getting involved with construction tech. So that's why, we brought on Guillaume there. And then frankly, for India and APAC, we're definitely still exploring that. I think that kind of ecosystem in that market is a little bit less mature than Europe. But yeah, all of this decision making around, global expansion, we're looking for those three things: startups, VCs, and industry.
Mm-hmm.
Martin, do you remember the stats from earlier? I was just trying to find them. The versus like US $30 billion invested
Yes.
at total exit values are like 15, was it maybe?
Yeah, so we have 30 billion venture funding in the US, 5 billion in Europe, 1 billion in India. And that's the funding numbers, and IPO numbers for the US, around 15
I've got the
billion.
figures, yeah.
15 billion. I think we didn't come to Europe, but India was at least like 4 or 5 billion, right? So these are the numbers. What's your question?
I just think to just highlight what Alice is saying about this notion of exploring Europe, and just not, like, and India, in fact, and expanding out of where they're currently based in the US. So it just makes sense at this point in time.
Yeah. So these numbers are showing that there's lots of funding in the US, but little of IPO actually coming out of this funding. Yeah. India is extremely rich with the IPO compared to the funding, and yeah, Europe, actually I can't remember the number of representing the IPO.
Yeah. So before today we were moving to the US, but now we're moving to India.
Yes.
We decided.
Yeah.
I mean, so I was just in India last month to really experience this. So since we've brought on Audi, I've been wanting to go to India because I hadn't been in, a good number of years. And the excitement around tech and startups in Bangalore is pretty insane. Like,
Yeah.
and I was talking to other VCs there, and it really does feel like construction tech is where the US was like 6 years ago. And that was like when I first joined Brick and Mortar. I was like, okay, joining Brick and Mortar, the number of construction tech startups that you could talk to, like at that point in time, I could probably spend the time to talk to like almost every single construction tech startup that was coming through our doors, right? And like for me, I love that because I was like, oh, I can like talk to everyone. This is great. I can learn about like every single new construction tech startup. But now where we're at today is like we can't get back to every, startup. Like there's so many startups that are like popping up that like, and I feel really bad because like we just do not have the time to capacity to talk to everyone. But I think that shows the maturity in the market, right? And like obviously we are global too, so there's a bit of that makes it a bit harder. But for India, I was talking to one of the VCs there, and he was like, yeah, like I can still talk to every single startup kind of in and at this time it's, prop tech and construction tech all together. And that's also what we saw, like 6 years ago when I first joined here is prop tech was definitely a lot more mature, and then you started seeing construction tech. And it really does feel like India is at that point. So if you want to get involved with that, like now is the right time. And I think there's going to be some really interesting deals coming out of India, like for India. But of course, like we're still learning about how people buy, the regional differences, construction. And yeah, another like really interesting thing that I want to share is like, in India, because they have so much software development talent and it's so inexpensive, a lot of companies are actually building their own custom software, and the like upkeep and all like maintenance is fairly inexpensive. So there's actually less interest in buying software in India. And it's like when you think that, it's like, okay, like a lot of the same problems exist, but you're going to have to change the way that you think about the business model, how you sell. Like you're going to have to like almost do a 180 on like what was the go-to-market that worked in the US or the business model and, the go-to-market. You almost have to like flip it 180 to think about how does that work in India. So
yes, different
it
work.
was like, yeah, I was only there for like less than a week, but I was like, man, this is like so interesting, like hot IPO market, a lot of startups. Valuations and round sizes are very similar to the US, which to me is like kind of crazy because I'm like, oh, I thought it was like, lower cost basis. Yeah, but it's like, I think, they may be in a little bit of a bubble right now. We'll see, but there's like a couple of companies that are kind of in the space that should be planning an IPO sometime soon.
I've been dying to ask, since you mentioned India, were you taking tuk-tuks or Ola cab to the meetings, or?
Oh yeah, I took a tuk-tuk. It was a lot of fun. And it's a lot faster.
Yeah.
So I did a mix of Uber, tuk-tuks. It was a little hot to walk, but normally I try walking.
Yes. Yeah, you don't walk in India.
As we're on the sort of subject of where maybe brick and mortar are going, how about the construction technology landscape? What was your views? And maybe we can stick to the US, and if, as we have been speaking about Europe and India, we can perhaps go to there. But yeah, where is, I mean, obviously AI, but where is like sort of the trend going?
What's hot?
Yeah. I mean, there's definitely a lot of AI. I think like any and every company is either adding on some type of AI related thing or now pitching as an AI company. So I feel like now you almost have to like discredit AI in some sense. It's like everyone's talking about AI, right? Like the industry is talking about AI. Startups are talking about AI. I think for us, and like what it's always been is like, what is the problem you're solving, right? Because, you know, throughout the entire life of construction tech, it's always been, you know, are you a solution looking for a problem, or are you actually figuring out the problem and then finding the right solution to do it? And we've seen this with like, you know, there's like the blockchain hype, there was a Web3 hype, there was, you know, DAOs, there were like all these things. And they were all looking for a problem in construction. And like, frankly, for us, it's like, you know, does it even make sense, you know? And then now with, you know, especially generative AI, there's almost like a Gen AI company doing any and every thing. And for us, it's like, you know, not only is what is the problem you're solving and does it make sense? It's also like, you know, how are the company, like, how does construction actually want to either pay for that, or, you know, are they ready for it? Right. If anything, like for everything AI, we're looking for a lot more signals from the customers than what is hype, right? Obviously in Silicon Valley, there's a lot of hype around AI. I think it actually is starting to die down a little bit. But to their credit, like there are some of these AI, but they're more like AI infrastructure companies that are like, you know, building AI software, selling to software companies that are scaling like extremely quickly. Like there are stories of these startups that are going from like 0 to, you know, $50 to $100 million in revenue in a couple of years. That's like insane. Like we're definitely not going to see that in construction. And it's not that construction doesn't want AI. It's a matter of like, you got to get a lot of stuff together before you can even adopt AI. And,
Yeah.
you know, for construction, clean data, structured data, and then, you know, there's so much stuff around data. So if anything, the like awesome thing about AI for construction is that it's starting to get a lot of these companies to start thinking about their data strategy. So it's like, you know, these are all the steps that you need to take before you actually adopt AI. And like, to be fair, like there may be some AI companies that come out in the next year that like, you know, help you structure your data, help you clean your data, and that'll help speed up with the adoption. But there's a little bit of that. And then also I would say like in construction, and you guys know this as well, there's a lot of like manual repetitive tasks on the project management side that, you know, would be great for AI to be leveraged. You know, in some, you know, human in the loop kind of way. Like I don't know if we'll get to a point where, you know, you could fully train computers to do certain things just because it's much cheaper and faster to do it with a human. So I think having a really strong strategy around like, okay, what are things that we should actually automate, and what are things that, you know, humans are good at, and it'll just not make sense to build and train some type of algorithm to do. So we're trying to figure all of that out, and I think that'll help drive the overall kind of AI investment strategy. But for now, I mean, we're talking to a lot of the startups, trying to figure out like, you know, are they actually solving a pain point where people are willing to pay for it? Because there's a lot of pains, right? If you talk to any contractor out there, like they will love to complain about how annoying and hard certain things in construction is. But it's a matter of like them willing to pay for it, and like what does that product or tool look like so that they can very easily engage, use it, continue to use it, and then potentially build upon there.
Okay, I've got a few points, Owen, to touch on, unless you want to jump into
No,
something.
go for it. Yeah.
Okay, so let's, if you can give us a little bit your insights on the current kind of macro state of things, perhaps from what you see in terms of startups emerging, or perhaps from the conversations with limited partners. Seems like everyone is quite positive about what's happening. What's your take?
So I think it's definitely
And I
still
didn't mention elections.
Well, I was also gonna kind of go there too. I mean,
But yeah, go for it. We want to also hear what's happening politically.
yeah. So if you think about just the last couple of years, we've seen, we already talked about more startups coming into the space. Even just like if you look at the number of CVCs that have been established, I mean, I think this year it was a little less, but like 2 years ago or last year and the year before, so 2022, 2023, there were a couple of corporate venture capital groups that kind of came up, right? And those are, from the construction industry. So there's definitely corporate venture investing interest, and we continue to see that. And now it's kind of growing globally. So
There's a new
that.
one, new recent one just launched as well. I can't remember the name though. Corporate venture capital arm.
Yeah. And it's like global now, right? And they're all trying to bring technologies and innovations to their region. I think the newest region is the Middle East. We'll see kind of how things go with the big NEOM announcement, but sounds like there's still, a ton of construction happening in the Middle East, and there are big contractors in the Middle East trying to pull technologies into that region. And that's a whole separate discussion. How does it work? Does it even work and all that? But yeah, we've seen CVCs grow, number of CVCs grow. We still continue to get a lot of reach outs from generalist investors asking about construction tech and learning about construction tech. I would say like every month.
US based or globally based?
US based mostly. Yeah.
US based.
But I probably, like every month, I probably talk to like maybe 2 VCs that are asking about construction tech, construction robotics, that type of stuff. So I think that's very interesting. And like one interesting point to bring up on the construction robotics piece is we've like this year, I've had a couple of generalist funds reach out asking about construction robotics. And these are typically, SaaS funds or AI funds. And I think particularly for the AI software funds, they're trying to think about like, what's the next thing, right? Like right now, everyone's investing in like AI infrastructure. But once, all of those investments end up getting made, what's the next step for AI? And that's the intersection of, AI in the physical world is robotics. So I was like, yes, that's awesome because, construction needs robotics. And then now kind of bringing it to what's happened in last month for the election, there's a lot of people talking about tariffs, deportation, construction material increase or material cost increase. And in the US, we've already had skilled labor shortage. So, what does that then mean, right? I think, I've always been pretty bullish on construction robotics. We have a couple of investments there. But now with, a lot of people like kind of, just thinking ahead on these impacts, right? We have already seen, more interest in construction robotics, but I think that's going to be, like even higher given, if you can't find work and you're worried that, some of your field labor may end up getting deported, like whether or not that happens or not, like it doesn't matter because people are already starting to think of it. And there's actually a really good stat. I may get this number wrong because I don't have it memorized, but I think if you look at the percentage of undocumented workers in construction. I think it's like 15% or something like that. So we already have a skilled labor shortage. Construction, it is a bit more on the residential side. We, have this risk. So now we have to think about, new materials, new methods of construction, whether that's prefab, modular, or robotics. I think, those are all really good tailwinds for us in construction tech. And then with, the tariffs, I think that will drive a bit more kind of prefab modular trying to buy, products from certain parts of the world. And then through our former Labs program, we have a company called MatBook that's actually like almost perfectly positioned because they're doing direct from factory procurement of building materials, but initially focusing on India, where, there have been, or not that I know of, tariffs around India to the US that have been announced. But of course, who knows if and when this happens. But these are the things that, we're thinking about as, we saw the election results last month and, trying to see if any of that ends up changing, the way that we invest and how we look at construction tech. But I think overall, pretty positive on at least driving innovation and technology adoption. So we'll see.
The name of the CVC that is WebCore.
WebCore.
Oh, yeah.
Yeah, corporate venture arm. Also one thing on the corporate venture arm, something I've already been thinking about, is how the UK, I still don't think we
don't
have
have any.
Yeah.
Yeah.
In construction.
Yes.
So I thought McDonald did.
You could be correct.
Well, this was a while back. I don't know if
there
there's
is,
but I
yeah, maybe. I don't know. I did do some like very basic. I didn't dive too deep into it.
Which means that Claude or ChatGPT didn't mention any.
I do know that like Sir Robert McAlpine has SRM Capital or something, and you're right, McDonald Ventures. Whether they're still active or not, I'm not sure. But yeah, on the robotics thing, you should tell your fellow investors who are snooping around to check out Bit Builders from Bricks and Bytes. That's our construction robotics podcast.
Yeah.
Shameless plug.
No, the hottest robotics in the construction news. Or info, Intel. So how many deals have you guys done in the last, let's say, year and a half or 2 years or a year even? And how many decks do you go through each day, week, month, or whatever? On average.
Yeah. I don't know if there are averages. I think it does kind of like fluctuate, kind of depending on what time of year it is. And, frankly, whether or not, we're traveling or there's events going on. Because, when we're in person, we try to give as much time to in person. So we're obviously meeting with founders when we're at conferences in person, but actually don't have data on that. Sometimes it's like, 20 founders at a conference. Sometimes it's like mostly catching up with industry, right? But what I would say is like, in terms of deals that we've done, our average is like 6 or 7 deals a year. And I think in 2022 was a year that I think we only did 3 new deals, but we did a lot of follow on deals. I think last year we probably did 6, and I think this year we're going to be at 6 or 7, I want to say. There's 2 or 3 kind of in the hopper right now that we're, in like legal diligence, still working through that. But there's 2 that we've done but haven't been announced yet. And I think we announced 2 this year. So it's a lot of the times the like announcements end up being, 6 to after, or it doesn't even happen. I think like with one of our Fund 1 portfolio companies, Curry, they did a Series B and it like wasn't announced for like 2 years. It's all kind of dependent on, is the founder busy? What's kind of going on in the world? But yeah, I would say we're pretty on par with our average number of deals. And yeah, in terms of like how many companies, I would say the better number is probably like we are adding like 100 to 200 companies to our CRM every quarter. But whether or not we
Solid.
are able to talk to all of them, I think that's another question. But now that we have, Guillaume and Adi overseas, I think that definitely helps with, time zone differences and the ability to work more closely with some of the startups. So I think we should kind of start seeing more in terms of talking to startups.
Continue
Okay.
to grow. Have you seen the quality of founder and founding team perhaps increase, Alice, since you're sort of day one on the job as a VC versus
Yes.
now?
For sure. I mean, and even going before I joined Brick and Mortar, if you look at some of the OG construction tech companies, I like calling them that.
Yeah, I know who you mean.
Yeah,
I call them the same.
Yeah. So a lot of the OGs, they had, a co-founding member that came from construction, right? Or the founder CEO came from the industry. And it was very much like, this problem exists and it sucks and no one's building tech for me, so I'm going to go build it, right? So that was probably like the first persona of founders that, we talked to, or well, Brick and Mortar, actually even pre-Brick and Mortar, Darren and then Curtis, back in, the early 2010s, right? Those were the types of founders. But now we're starting to see, repeat founders that, have done and sold a company and now looking for, the next big industry with a lot of problems to kind of come in and build technologies for. So we're seeing that. We're also actually talking to founders who, have deep domain expertise, whether it's robotics or even AI, having worked at, big tech companies doing AI for the last, 10, 15 years. And trying to figure out like, okay, I've done this thing at the tech company. How do I now take those skills and apply it to, an industry and a problem that's probably a lot closer to something that's tangible. And, part of it is also like the feeling and the need and the want of trying to solve a problem that, a lot of people face. We've seen a lot of, roboticists and, people who have left the big tech companies to come do stuff in prefab modular AI. And yeah, we're very excited that this is happening. I think what that means is, people are starting to notice that the construction industry is really big and it's not very digitized. And there's capital coming into the space. I think that's also very important, right? Because entrepreneurs aren't going to start a company doing something that they don't know if they're going to be able to raise venture dollars for. And these are more like, repeat entrepreneurs who really know and understand, Silicon Valley startups and VC.
Okay. Owen, anything else on this, or should we touch on the Formwork Labs?
Yep. Go for it.
Okay. So, at least Formwork Labs. It was just created in 2022, I think, or just around that time. So where is it right now?
Applications are open. So thank you for allowing me to do the plug. Applications for Formwork Lab is open now until January 5th. We're running our 4th cohort. So it's pretty crazy that we've already done it 3 times. So we've got 15 companies that we've invested in and worked with and continue to work with. And the awesome thing is a couple of them have already raised follow-on capital. And there's actually a couple that are like probably close to completing fundraises, and some that will be raising early next year. So I think that's probably the, for me, some of the, I guess, like proudest, most validating moments is like when these startups that we believe in, other people also believe in, right? I think like we're always looking for external validation from other VCs because, we know construction, we see these problems, but, whether or not the founders can articulate that to people who don't know anything about construction, or those VCs who are, really focused on, hyper growth and whatnot. So it's an exciting time right now. Yeah, we're excited for the next cohort. And I mentioned, before we started the podcast, we have Brogan helping us. So Brogan, who writes Last Week in Contact, he's helping us with, some things for the program. So it should be a fun program this year. And there's a couple of things that we're going to be launching.
Can you tell us a little bit more about companies that you have there? I don't know if you can or you should not mention names, but what they do and like what's your criteria when you think about picking these companies? Yes, maybe let's go from there.
Yeah. It's always hard to, name specifics because you're supposed to have a favorite child. But in terms of what they do, right?
That's okay. Entrepreneurs are tough animals, so they wouldn't feel offended.
Yeah. I mean, it ranges, right? I mean, we have, companies that are they're selling to all different customers and they're all different business models, right? So, the most recent one that, has had, some type of press is Veristart. So they won the, Hitachi machinery challenge, I think. I don't know the exact name. I forget. But they won a challenge that Hitachi put on. And Veristart, what they do is they're a hardware and software tool that helps with access controls for equipment. So I think, actually, I'm like, I probably shouldn't explain exactly how you do this, but let's just say it's very easy to steal equipment. And it's like a very well-known secret in the construction industry, what you can do and where you can get keys to basically operate excavators, forklifts, that type of stuff. So let's just say it's really easy to, go on a job site and start operating these tools. So of course with that,
You're right.
it's a safety concern. There's theft, there's an insurance angle to this. And the crazy thing is like no one's really built anything to go help solve this. And, we got a validation from our LPs, from, folks that we know in the industry. We accepted Veristart into our program. And they recently won this challenge. So, we invest in, those types of technologies as well as, software tech like, BuildPeer, that's basically trying to become the Fieldwire or Procore for the emerging economies. So they're based in Mexico, going after the Mexico market right now. And it's really, a lot of those regions where Procore, ACC, and some of these bigger technology companies are basically priced out, or they haven't figured out how to, sell into those markets in those regions. So BuildPeer basically wants to go after all of that. So, they're doing the initial transition from paper, pen, email, Excel into, first project management solution. So we're doing that. We've also done, so I mentioned MatBook a bit earlier, doing the, direct from factory procurement. So in this program, we get to be pretty, broad ranging with the types of technologies. But then again, at Brick and Mortar, we invest in, all different types of business models. And we really look at, for this problem in construction, what is the best type of solution? And then also, what is the best type of business model to actually, go after the industry with? So we're pretty agnostic from a business model perspective, which, in some sense, it's challenging because a majority of the VCs in Silicon Valley still, only do B2B SaaS. But for us, we know that, construction is unique in the sense that you kind of have to pick and choose the best business model, best go to market for the problem that you're solving. I guess, on the criteria front, what do we look for? It is a very, very early stage program. So it's really for founders with an idea who may or may not have fully figured out, what is their ideal customer profile, even really their MVP, what are they building, what is their initial wedge product. But for us, like, we really just look at, what is the main problem that they're looking at solving. And if that's big enough, and the founders, we like the founders, we have a big no asshole policy. We don't like working with assholes. And we do work really closely with these startups. So I would say like those are probably the two like main criteria. And then we also look at, how much value can we add to this company, especially through the program. A big portion of our program is what we call customer conversations. So we actually connect those startups with people from industry to provide them with, product feedback, mentorship, potentially pilot projects. So we want to make sure that the problem that these startups are solving are actually relevant for these customers, because we think that's one of the biggest value adds of the program. So we want to just make sure there's a match there. And we've had startups apply where they're great founders, great startups, great ideas that, we didn't accept into the program because we just didn't feel like through the program they could get the most value out of it. Because we want to be fair. We write a $75K check for 5% ownership. We want to make sure that, the value that we are adding to that company is worth the 5% equity that we are getting. So we do a lot of that kind of thinking. But, a lot of the companies who have applied, and if they're relevant, interesting, we still kind of work with them, even if it's not through the program, and kind of prep them for, seed and Series A, where we do the majority of our investments that are, outside of Formwork Labs.
What was the strategic purpose from Brick and Mortar's perspective of launching Formwork Labs?
Yeah, so for us doing early stage seed and Series A, we always try to work with the founders, early, like way before we even do an investment. And like, frankly, sometimes that takes us longer to make an investment decision because we invest on a slope, not a point. So we don't, take a pitch meeting, maybe take 2 pitch meetings and write a check, right? For us, like, we like working with the founders to make sure that, their thought process makes sense, they're taking feedback well, they're good people to work with. So pre-Formwork Labs, we actually spent a lot of time coaching, working, mentoring some of these earlier stage companies. So one kind of, way for us to structure that was Formwork Labs, but also at the same time, we were starting to see more industry interested in getting involved with startups. So that was an opportunity to, have something formal to engage industry. We were also seeing entrepreneurs come from outside of construction. So part of the program is really teaching, the nuances of construction tech versus B2B SaaS tech or something like that, right? So all of our trainings, all of our sessions are very construction and construction tech focused. And we were seeing investors, generalist investors who, don't normally do construction tech, interested in construction tech. So I feel like there were a lot of these little signals where we were like, okay, well, it makes sense to try it. So we tried it in 2022. It was pretty successful in the sense that we were able to get a lot of interest from industry VC startups. And then we tried it again in 2023. And it just, continues to grow. So, we're already thinking about how do we do more in different regions. Maybe there are, different nuances to the way that, startups want to engage or industry wants to engage in different regions. So, we've had a lot of conversations about, expanding and adding more. But of course, we're kind of waiting for industry startups, it's a little bit of maturity that we're waiting for. But once we think the timing is right, we're happy to, expand the program to do more stuff.
Mm-hmm. So I think it might be, okay. What's the venture capital persona? Well, how will you be successful in 2025? Let me put it this way, as a venture capitalist in 2025, like what needs to happen, or like how do you need to think about your industry and what you do coming into next year?
Like on the VC side?
Mm-hmm.
So here's the interesting thing. Like, we've been waiting for the 2021, overvalued company burst recap, all that. I think we started to see some of that happen. I mean, this year, I think there were a couple of funds that basically shut down, VC funds.
Mm-hmm.
There were a couple of funds who shut down, returned capital to their LPs. laid off people. A lot of that was happening, I would say, even like towards the end of last year and this year. We've also seen some funds do types of investments that, they don't normally do. So like come earlier into, the stages for investment. So we've seen a lot of like interesting things happen, right? And a lot of it, I think, having to do with, markdowns on portfolio performance. It's just been a little bit of a crazy market, at least here in the US in the last couple of years. So going into 2025, I mean, and, I think we're obviously a little bit biased because we are a sector focused fund. As deals kind of, get more competitive and, VCs are trying to differentiate from others and try to figure out, why should startups take their capital versus others? The big question is like, what is your actual value add to these startups? So us being a sector specific fund, and, our personal experience in the construction industry, our network in construction, our LP base, all of that. I really see us as, by construction for construction. And I do think, 2025, there will be more of, interest in sector specific funds, just because, if you're going to raise capital, you kind of want a strategic partner to help you along the way. So a little bit biased there. And then, of course, I think like this year we are starting to see some of the bigger rounds come back. And I don't know exactly what is the reasoning behind that. But yeah, for us, we've always stayed pretty disciplined on, we're not going to overpay for companies because it doesn't make sense. We don't fall into the hype. And, we have economics for a fund that need to make sense, right? We're an early stage fund. We have target ownership requirements. It just doesn't make sense to have smaller ownership, write a big check for a crazy round. So I think just staying disciplined next year, that's another key thing. So I don't know. I'm obviously very biased and optimistic about brick and mortar, but yeah, I continue to encourage other investors to look at construction tech, especially with what we've talked about on kind of the things changing the industry, or at least industry sentiment around, costs, labor, and all that.
Do you think there will be the reason I'm mentioning this, because you mentioned that there were a few deals which seemed to be quite overvalued and you didn't want to participate because of the mandate that you have within Brick and Mortar Ventures. So I guess these deals were taken over by the general investors. That's one question. Another follow-up on this is, do you see like a mega construction tech venture fund happening, being built in the future, perhaps, or rather not?
Yeah, so I think with some of these big deals that have been done, they are funds who have, probably seen similar type of stuff for other industries. That's my guess as to how you're kind of underwriting it. And they are mostly done by, folks that may not know the construction industry so well. Obviously everyone's entitled to their opinions. But for us, some of those companies, it's like, okay, what is the exit potential for that, right? Like, does it actually have an opportunity to become a platform play, an IPO, or if it ends up getting bought by some of the, big incumbents, what does that exit look like? And, will we make our money on it? Will we make the returns that we want? And, that's the type of math that we do for every single deal. And sometimes it just doesn't make sense. It's like, if we buy in at this type of valuation, like the markup may be, you may not even get your money back, right? If it doesn't work out. So, yeah, in terms of like the mega funds, I don't know. We've toyed around with the idea of doing an opportunity fund for, later stage construction tech, mostly, our portfolio doing later stage investments, cherry picking some of the best ones.
What's the definition of a mega fund?
So not mega fund, but opportunity fund.
Oh, sorry.
Yeah. But I'm assuming mega fund meaning like, big, like multi-$100 million funds doing.
Yes.
Yeah. I don't know if we'll see that. And I don't know if we want to see that, because from a maturity of the construction tech ecosystem, I don't know if we're there yet, right? Like I could see a mega fund maybe doing materials and equipment and more kind of physical capital intensive stuff. But for those funds, you need, probably a 15-year fund life. You're doing more capital intensive stuff. You need more money. But a lot of those timelines for those companies take a bit longer too. So there's probably a time and a place for that, but maybe not for, general across all construction tech. But in terms of the big funds, I mean, we've seen Tiger Global, Insight, some of these like crossover funds, who started on the hedge fund side, now doing, growth equity investing, and then now coming into venture. I mean, this was, the last couple of years with some of those mega rounds. There are some of these, big funds investing in construction tech, but it's more a carve out or like a strategy. And they have team members who are focusing on, industrial and construction or something like that. But I don't know if like in the near future, we'll see like a big fund focusing just on construction tech. I mean, even for us, as we are thinking about Fund 3, we're not thinking about raising, $1 billion, right? Just because, you have to put that capital to work, and you have to make sure there's enough good bets to put to work, right? The last thing you want is, you're like, well, we can't find good bets, so we're going to return, 300 million to our LPs, right? So I think there's a lot of that thought process. And Darren had kind of thought about that from the inception of Brick and Mortar, and being disciplined around fund size and matching that with the maturity of the market. So if you look at, prop tech versus construction tech, there are a lot more prop tech funds. There are a lot bigger funds. And to some extent, like a lot of those prop tech plays have not done well. And I think part of it could be they almost had oversaturation in capital. And like selfishly, personally, coming from the construction industry, I don't want that to happen to us, because that ends up causing a lot of confusion for the customers, right? It's like you have some like company raise a crap ton of money, all of a sudden you see them everywhere, but then you engage and you're like, oh, well, their product isn't that good. They haven't actually built out, what they say they are, or they're over promising. And then that all of a sudden puts a negative like taste in people's mouth on VC backed construction tech companies. And we kind of already saw that in the last couple of years where, I'm talking to customers or industry professionals, and they're like, oh yeah, this company like totally oversold this. Like they're not doing what they said they would. And they're all venture-backed companies. And I think part of that is like a cultural challenge where, for VC-backed companies, you're selling the vision, you're selling this crazy, take over the world kind of thing. And for contractors, they're like, no, I just want to know, what do you do? Like, be honest with me, because, if it works, it works. If not, and you sell me something that is snake oil, like I will blacklist you and I will tell all my friends. Wait for you. Like the industry is big, but people do talk, and there's a word of mouth.
That's how it should be.
Yeah, I agree, and it's good, but then it's also bad in the sense that like when you do have a good VC-backed company that's trying to do the right thing, there's already this like negative
prejudice.
Yeah, so I don't know. Those are the things that I'm like, I think extra like cautious about, because I feel a little bit protective, but at the same time, I'm like, we need more tech. Don't mess it up for everyone.
Alice, just maybe in one sentence, what would be this opportunity fund in general? Like, what's the idea of the opportunity fund?
Yeah, so it's not official, so technically shouldn't talk too much about it. But the idea behind general opportunity funds is you raise a bigger fund that does like follow-on investment for your portfolio companies that are best performing. Some of the opportunity funds that people raise actually are just later stage, and they also mix to do some like stages that are later than what they normally do. So there's some funds that are only portfolio. Some funds are a mix of like portfolio plus others.
No, it makes sense actually. Nice. Okay, thank you. So last question from me would be, well, with the when you speak with your LPs or your colleagues speak with your LPs, like what's the sentiment from LPs' point of view? Is it and also is it difficult to raise a fund, venture fund in construction tech these days, or is it easier than it was?
So I think it depends, right? If you're raising from some LPs, or I guess like if you're raising from the industry, right? And both of our previous funds are from large corporates in the construction value chain. Frankly, one of the challenges is like they're just not used to doing venture investing. So they don't understand much about the mechanics of it. You know, some of them, when we have initial conversations, it's like, oh, you know, you want $10 million? Here, let me write you a $10 million check. But that's not how like venture capital works, right? Like we have quarterly capital calls, like you commit 10 million, but you know, we have capital calls over time where we request for that money. And if you think about like, you know, a construction business, it's really hard to like budget, allocate, you know, you have this thing that's going to last for 10 years. And, you know, sometimes people change jobs at, you know, big companies. So sometimes it's a bit of a challenge because you're like constantly dealing with different people. And this whole like VC investing thing is a very foreign concept. Unless if, you know, you're one of the companies that, you know, are very much used to growing by M&A or something like that. So it really does kind of depend on the DNA of the company. So yeah, I think like there's a lot of, I would say like folks within the AEC supply chain that are interested in working with startups. They want to do this venture capital thing, but they want to write a small check. Like there are like GCs that want to write, you know, a $200,000 check. But the challenge for us is like, you know, we like to work closely with our LPs, and we can't have like, you know, 50 LPs. That's like a lot of time just spent working with LPs. And frankly, with a lot of these construction companies, they're just looking for strategic value. They're like, oh, can I like pay you? But then you have to then basically consult with me and like tell me about all this stuff. And I need all your time, right? And that's not what we want to do. For Brick and Mortar, we want to be a top tier institutional VC. We're in it for the financial returns. We don't want to be the best construction tech VC. We want to be one of the best VCs. So with that, you know, for this upcoming fund, we're actually looking at diversifying our LP base to more institutional LPs. So like pension funds and others who understand VC investing. And they're not going to ask you a million questions on like, hey, can you come and present to our company on AI or, you know, that stuff. Like we love doing that, but it gets to a point where it's not very scalable for us. And, you know, we want to do what we're paid to do, which is finding the best companies and invest in them. And yeah, I think like generally speaking, there's definitely a lot more interest in industry and getting involved with the world of VC. But whether or not it kind of fits like at least our criteria, we do have like a smaller subsector of that who, you know, want to do a big capital commitment. And we almost kind of do that as a little bit of a filtering mechanism on, you know, how serious are you about venture investing? And from a time, you know, allocation perspective, we can't have too many LPs.
Hey, so I have to sneak one more, and promise that's the last one.
You already said last one.
Yes, but
No.
You said something interesting on the contractors or GCs that they're asking for some like they're willing to pay for some like a consulting, let's say. Like what is that they're missing? What do they want to get from folks like you to better themselves? Like what are they missing really?
I mean, they want to know what are the new best technologies to implement. So I think a lot of the conversations with contractors mostly, it's like, okay, what are technologies that we should know about that we should use? And like, frankly, if you're a GC and you want to know that, like, you can look at our portfolio page. We've invested in a lot of great companies. And
hey, that's another plug, Alice, by the way. There's two now.
Well, but like, frankly, like the companies that we invest in, like they're at least like, you know, how I think about it is they're technologies that I would want to use when I was in industry, right? Like I'm not going to invest in things that I don't believe in. So obviously there's like a reason, and us doing our competitive landscape, our diligence, like we think we've invested in the best of each category. So we always, and like the thing is, it's public, it's on our website, but contractors still want to be walked through it. So a lot of the time, like we basically talk about like if there are problems that they're looking to solve that one of our portfolio companies is solving for. It's a very easy, this company does this. But if they're looking for solutions that we have not yet invested in, like we actually are more than happy to give them the names of, here are the 3 companies that are doing something in that space. And, we're not trying to be a gatekeeper of any means. Like we want to help people and let them make their own decisions. We are not here to like tell you what to do. But oftentimes that ends up being great because, we may have heard feedback from other contractors that we're also able to share. So we do try to help out with some of that like decision making. But of course, we're really not trying to just sell our portfolio companies, because sometimes, depending on the size of company or the region, there may actually be a company that's better suited for them that's not a portfolio company. And we're still happy to share those names because, I think there's a lot of room in construction for, players that kind of fit specific needs.
Okay, one more.
I'm going to kick you out of the room now. I did have one, but I think we're getting slim for time, so I will just completely change the shift of conversation. And curious to know, Alice, what the day-to-day of a construction tech VC looks like.
Oh, a lot of meetings.
How many like Teams meetings per day, or whatever video software you use?
I mean, it's like more or less back to back with meetings, but different types of meetings, right? We have, our team meetings, 2 times a week for our team. We meet with our portfolio companies. We meet with startups. Sometimes we meet with our LPs. Sometimes we meet with industry. So it's all kind of just mixed in there. I think the cool thing about Brick and Mortar, because we work so closely with industry, a lot of my time actually gets to be spent with industry, which is like more fun for me than talking to other VCs or startups.
Makes sense.
I always hesitate to say, but like I genuinely just enjoy, working with people in the construction industry and hearing about, what are the problems they want to solve, what solutions they're looking for. That's probably the favorite part of my job. But of course, I talk to startups and we talk to a lot of other VCs as well. But yeah, I would say like it's more or less pretty back to back. But yeah, split time between, all of those players.
Your one tip for running an effective meeting. Sounds like you have some experience.
For pitches, I think I've gotten really good at trying to contain, those meetings to 30 minutes. Like when I first started, it was 1 hour meetings with startups. And then I realized that like, you get to a certain point, especially like coming from industry, you don't actually have to spend that much time explaining like, oh, the industry is this big. This is, the prior workflow. This is the new workflow. I mean, honestly, some of these meetings I finished in 15 minutes because, I already have the pitch deck. I've already reviewed it. And I just have very specific questions to ask. And I already know what they're doing. So I think that's one of the advantages of kind of sector specific fund is, some of these startup meetings can be like super efficient and, there's no offense. It's like, well, founder just did a really good job at explaining what they do and they get time back for that. So yeah, I would say tips. Actually, did you ask for tips?
Yeah.
One tip.
Yes.
Just watch the clock.
Less is more.
Yeah.
There we go.
Yeah. Honestly, less is more. Like, do not over explain and do not use crazy buzzwords. Like that's actually like anytime someone tries to explain things with like, 10 words when you could do it with 3, like, no, like, like, because I know it's not going to work for contractors, right? Like, if
Yeah.
you're pitching me that way, and like, I don't know how you pitch to your customers, but I know for a fact, if you say all those things to a customer, they will immediately just like shut you down. Like, explain it as simple as possible. Don't try to sound smart.
Of course.
Very good.
Okay, Alice. I feel like we do ask everyone this question, but I don't know. I don't think there's anyone that we have ever spoken to or that listens to this podcast that doesn't know who you are. So, can you tell people where they can find out more about you?
Yeah, I mean, you can find me on LinkedIn. Just search Alice Leong, Brick Mortar Ventures. But no, there are definitely more and more people coming into the space that I don't know, and I'm sure they don't know me. So just spread the word.
Cool. Thank you, Alice.
Thank you.
Awesome. Thank you.